It's the new 106.7 My Talker Radio. Now, back to a kinder, gentler Curtis Wright on the beat.
You had to pick that one, didn't you? It is 7:05, hour number 2 across southeastern North Carolina. Honored to have in studio once again with us, and I hope we'll continue this every couple months because I think it's so important right now that our folks like our next guests are in studio to help our listeners, to help Americans, help our citizens here in southeastern North Carolina and beyond. Just watch out for whatever investments they have or whatever decisions they're going to make in that area of savings and investments. And with us is Scott Nabell and Scott Winslow, and Mr. Nabell is with us as well. And folks, if you haven't gone to our website and gone to their website, it's nabellwinslow.com. And welcome, gentlemen.
Good morning.
So, Scott and Mark are with us, and as I said, I was talking to you a little bit off mic, but we've been talking a lot with Dr. Craig Galbraith, and we've been talking a lot with others about what to do in this time of uncertainty. We have, you can see even with the Fed policy, they try to come out of that corner that they've put themselves in with these policies over the last couple of years, and the market just like freaks out. It's a negative response. But I guess my question is, what kind of advice are you sharing with your investors right now, and people who want to invest or people who are concerned about what's going on in the marketplace?
Well, go ahead. Well, when dealing with stock market investments and things of that nature, you got to revert back to the client first and foremost. What are they looking for? Are they growth, income, capital preservation, or a combination? And when you look at the stock market right now, we've been on a run for 5 years or so, and there are different economic things that are causing it to go forward. One is we were really deep, so it's got to go up in 2008. The second thing is we've had a really mild GDP. A lot of questions I get every day are like, when is the next recession? On average, it's now. I don't think that's coming right now. We do have a fragile economy, but things that are playing in the market to really make it go up is the massive amount of liquidity there, nowhere else to invest it. And so as long as corporate earnings can continue to keep pace, you're going to see equities grind further. I don't think you're going to see a lot more in immediate term like 2013, but I do think equities are a good place to be if you have a proper long-term time horizon.
I mean, that's the real message, isn't it? It's one, know who you are and where you are and what your goals are. Mm-hmm. And then two, to take the time to look at, in respect to that, what opportunities are out there. And let's be honest, there are opportunities out there for growth. Like you said, it may not be huge leaps forward, but there is an opportunity for protection and for growth, right?
Yeah, and when you look at overall, I think we're probably cautiously optimistic too. We're still in a bull market, and when you employ your capital, you have to figure out where your choices are. Is it cash, fixed income, equities, alternatives, real estate? Where are you going to place your money? And so you have to design it to the best fit of that client, and each one's a little different too.
Now, one of the things with your firm, of course, is you have all different types of what we call products in the industry. I call them opportunities, and that is, it's not just stocks, it's not just bonds, it's there's not just mutual funds, it's these things that people just rattle off the few things on their head. There's lots of ways to put together an overall comprehensive plan and how all those components work with each other.
Sure.
Is that right?
That's correct, yeah. And you also have some hybrid type scenarios too, where you have a contract, where like you shift risk to an insurance company, for instance, in some instances. So there's different things you can employ to help that client out.
Yeah, I mean, when I was a practicing registered investment advisor, that was one of the things that was really important back then, was looking at insurance products, especially for transfer of wealth, preservation then transfer of wealth. Is right?
Yep, that's correct. There, but also too, you have some challenges clients face. They may not have the right amount of capital and assets to retire comfortably unless you do use a contractual situation where you're protecting against longevity risk. So there are some different insurance products out there.
We've talked about for years, how the population is living longer, and and you see the commercials out there. You have enough money for the rest of your life? And then, of course, it's just as important for many to pass on something to their children, grandchildren. But that's a real tricky situation, because I think when I look at it, it's sort of snuck up on, I mean, even though we were talking about it, even though we knew it was happening, it's sort of snuck up on a lot of people, a vast majority of people, that in fact you could live 15 years longer.
Yeah, it sneaks up a lot of people every day too. We see this where someone's getting ready to retire. They've not given a lot of thought to how they can take Social Security, for instance. Is it integrate with their pension plan? What's their pension? What are their pension options? What are their assets? You know, typically most people spend more time figuring out their vacation plans than they will the retirement plan. So that's why we have jobs.
Yeah, and what we try to do is just combine that and really find a way to give them a tax efficient and a tax thought out methodology versus just doing it from the hip. And when you do that together, you can add value. You know, it's not easy getting an income right now in this market. You got a 10-year treasury hovering around 2.5. Getting a stable, safe retirement income above cash is a difficult thing to do. So we have to do a lot of due diligence and things, coordinate it with people's Social Security to make sure they have enough money. Let's be honest, doctors have done a fantastic job extending our lives. I mean, life expectancies from the day Social Security started was about a year and a half. And now people are living up late 90s, hundreds, and there's absolutely
and that's what
nothing.
I meant by not sneaking up. Maybe that wasn't the right way to put it, but you know, you think about it, and yeah, I could live longer, but people really don't go beyond that. No, you've got to write that down on a piece of paper, then you have to put a plan to it. You know, the one thing, and whether it's off mic with you all, or whether it's our times that we've just sat around and talked, or whether it's here on the show, because I was in the industry for 12 or 14 years. The one thing that really jumps out at me is you guys just love being really active. I mean, really active. You know, some would say almost nerdy about it, but you know, a lot of our industry at one time, and I don't know now, I'm going to be honest, I have been out of it for a long time, you know, was really a retail mentality. What am I closing? What's my commission? What am I doing about, you know, getting some activity and some commissions? And I don't mean that disparagingly. I'm just saying that it's a focus of the industry in the past. Whereas since I've met you, it's like you're really active in the accounts. You know, yeah, putting the plan together. You called it the interview process and figuring out where people are, but staying really active. And that's really important. I mean, people underestimate how important that is of their financial advisor.
It is, and Scott is a nerd, by the way. But it's a passion.
I was trying to be nice.
Yeah, it's a passion.
It's a passion too. I've been to his house before, and it's like there's trade magazines everywhere, you know. But you never stop learning. You learn something new every single day. You're always learning. Every day there's something different, you know. And you look at some things that make sense and some things that don't make sense. And so, how do you employ them correctly with someone's situation?
I mean, what we saw in the past, you know, when I entered the industry, it was after the Clinton bubble, or bubbles, and of course then we saw a tremendous amount of growth. But the one thing that really hit people hard was that they came up with a plan, so to speak, and then they left it on autopilot, and that was the worst thing.
Yeah.
If they had been actively involved, and I know it takes a lot of, we'd say, clients, you've got to be actively involved, so do I. You know, that was, you know, our mantra after that. But it is something that should continue to happen, right? I mean, you got to stay involved. What's going on today? What's going on next month?
Yeah, and not be complacent too, because the horse that got you here may not win the next race. So we see a lot of times where a portfolio will have, say, a higher percentage of maybe alts, for instance, alternative classes in there. But you have to look at what value is that adding to the portfolio. If it's not increasing the value, if it's not reducing risk, what good are you doing? You know, it's maybe a panacea that worked, you know, 5 years ago, 6 years ago, but is it the right thing to do today, for instance? So you have to study this all the time. You have to keep abreast of all the markets.
I think the one thing I took away over the last several years was I would say to people, if an investment advisor sits down with you and starts to talk to you about the history and the trends, and that's the focus and the way things were, I mean, this is my personal feeling. I said, I think you ought to get up and go out to lunch somewhere. Because my belief has been these last couple of years, or maybe more now, whatever was isn't, and whatever was certainly isn't going to be. It's just crazy.
Yeah,
and that's what I'm saying about your practice is you are all on top of this, and that's the only way I think people can survive. I wanted to talk a little bit about, maybe when we get back, what is some of the advice you're talking about with folks to protect them, to make sure that they've got a plan, but a plan that will work for them for their longevity? I'm Curtis Wright on the beat. I'm here with Mark Nabell and Scott Winslow, Nabell Winslow, and don't forget, you can go to their website at nabellwinslow.com. Please do. Please make it one of your favorites. We'll be right back.
Curtis Wright on the beat.
Can you think of anything more American?
This is the new 106.7 My Talker Radio.
Okay, we're back live here on the beat. This is a special business spotlight. I'm so glad and proud to have them back in studio. Mark Nabell and Scott Winslow are with us, of course, from Nabell Winslow. I asked you before the break. I said, what do folks do? What kind of advice are you giving them? And of course, it all has to do with a specific client, their specific situation. And I think it's fair to probably say that you're probably seeing people with a wide range of situations that they're in, conditions that they're in with their portfolios when they come to you. But what kind of advice are you giving them right now? I'm asking a generic question, knowing this tenuous situation we're in, and that it really does take a lot of work to find opportunity out there for preservation and growth.
What we're seeing now is that we are 5 years into a secular bull market. So if clients come into me and they're 55 to 65 years old and they're starting to get down to where, hey, look, we got 5 to 10 years where we really do need a cash flow off our retirement. We're doing lots of different things. Maybe we take a little bit of risk off the table with the equity markets. Now, I'll tell you, Curtis, I still believe in equities and investing long term. I think that's a great place to put your money, but you do need to have a sell discipline. And so sometimes we'll put portfolios in to have a great sell discipline that reduces risk should economic times get a little more rockier going forward. We're doing some things with some real estate investments that get people some good, dividend incomes. They'll say, well, it's not guaranteed. Well, you know what? Right now, the only thing that's guaranteed is getting you really less than 1% at a bank. And so that doesn't beat inflation, doesn't help you pay your bills. So we'll move into that. Another thing we'll do is go into tactical investments in the fixed income market. Maybe not for yield so much, but for capital preservation. Like, hey, look, what part of your bucket needs to be preserved? So when we look at that, what I try to get my clients to do to be good investors is we know over long term equities outperform. You can look back, and we don't. You want to look forward, but you want to look back too. And we know equities outperform. So what we want to make sure they understand is what is your threshold for income that you have to have so that you can relax. And let's set up the portfolios to do that. How much safe asset, short term or cash, do you have to have in case something goes wrong in your financial life? Get those first. Get those set up. Get the cash flows, the liquidity, and then let's build a portfolio for the next 3, 5, and 10 years. And so that's what we are doing at Nabell Winslow, is setting up portfolios for individual clients of that nature.
Now, previously I mentioned insurance. I mean, there's a lot of things you're looking at in the markets. Again, a lot of people just think, stocks, bonds, those type of things. There's a lot of different options for people to put together or components in their plan, right?
That's correct.
But one thing, too, is you have to look at it. They're all tools to use. The problem is, I'll pick on the competition, but some of them, everybody's a golf ball and you're a driver. It's like, it's not the same shot every time. You have to use these tools and not fall in love with them, too. They're simply items to utilize.
Well, when you're talking about a sell plan of sell mentality, or you said your triggers. I mean, that's what you have to do, is take the emotion out of it. You got to put a plan together, and it's got to be fluid in a sense, so if that's the right word. I mean, in today's market, it's got to be constantly fluid. You got to be looking at it, seeing what's happening. Is it, understanding, more than just picking a little bit of that and picking that why did you pick it?
Right.
And how long was the original idea, right?
Correct.
That's what you're saying.
And a good example of what we do at Nabell Winslow is we get research from many sources. We do not know everything, but we do want to use the wisdom and judgment to use that research to help put portfolios together for clients. So, and what we base a lot of that on is if fundamentals are good, that's not good enough for us. Fundamentals need to be improving. And if they're improving, we typically are buying into that stock position if it meets our criteria. If fundamentals start decreasing on that, we're typically exiting the position. A lot of people say they do that, but they don't. As long as the fundamentals look okay, they stay put.
Well, that comes back to what I said, and that is that I feel with in meeting with you, talking with you, and these interviews that we've had. I guess the word would be personal. You know, the tendency, I think, when you're inside, and again, I'm not trying to disparage any other, advisors. The tendency is to come up with something and then leave it.
Set it and forget it.
Set it. There you go. You said it.
That's what our grandfathers did.
Yeah. And I think that's just that's an easy thing to do. Maybe that may not be the right way to characterize it. And you're right. In the past, you could leave a plan for a longer period of time. And that's why, making, little jabs at you about being nerdy. But it's about research. The more knowledge your investor has, the more things you're constantly looking at, how they're changing, how they're evolving, how they're being used as components in the overall portfolio plan, right?
Yeah, and we get help too. We actually will construct a model or portfolio strategy, if you will, and then ship it off to someone else to review it, break it apart, analyze it, so we can put it back together better too.
Get second opinions.
Yeah.
Now, nuts and bolts. Let's tell the folks a little bit about some of the resources. How now? I jumped over this. Maybe that's where we should have started, but I just know you for so long. How long you been in business, and you've more recently now, maybe not more recently, that you've gone independent and set up Nabell Winslow.
Well, we worked together. Scott and I worked together the last 10 years, 11 years now. We're at a big institution. We thought we could build a better mousetrap, if you will. And so that's what we did. We put together a game plan, a business plan, and just executed it starting September of last year. And so it's been going better than we anticipated to. It was very well received in the community, in the marketplace, and now a lot of folks are following us also. So there's a push towards independence, so you're not beholden to anybody. You're beholden to the client, not to a firm, not to a profit margin, not to a goal that's just arbitrary. You're beholden to the client. And that's what we did. We made promises to clients, and we intend to keep them too for the next 100 years, for their families, for their next generation. Scott's, a couple years younger than me.
So I think one of the things that I saw, and I was lucky enough, and I do mean lucky, to go independent pretty quickly. Maybe I wasn't even at that position to go independent yet, as others had. But what I mean, when I looked at what was happening, and I wasn't happy about being in a large institution.
Sure.
And again, I'm sorry if I'm disparaging anyone out there, but what worried me was the influence of banks, the influence of the large bureaucracy of the institution. Instead of that being an investment advisor, to me, was being that personal, having that personal relationship, and it being personalized, not so, I don't know
Curtis,
what the word to use.
We have a crisis in our industry to where the big institutions, some of you in the small institutions, have just completely forgot about the client. And it's always what's rammed down your throat for what you need to do for them versus what's good, honest advice. And so what we're trying to do here, like Mark said, and he did it very well, said we're building a better mousetrap. We have a crisis in the financial services industry. No one's thinking about the client, but more importantly, there are no new young advisors coming along. I mean, I'm young in our industry field, but you look behind us, they're not there. And what happens is
you know why? Because it went to retail.
Well,
the bureaucracies.
It's a tough
push
business.
Down on that industry, and what its goals were not the goals you're talking about. The client, to giving that expert advice, that personal advice.
Well, what happens is the best salespeople succeed, not the best advisors.
Right.
And so what we're trying to do is build a model that looks more like a law or accounting firm, to where when we're going to hire a young gentleman here in a few weeks to come on and be in our training, he's been training for several months, to where we're training him to be a good advisor. Now, you got to have good business development skills to some degree, or you won't make it in this business. But if Mark and I go out and say we build a better mousetrap, we have a 100-year business plan, and we don't invest our own capital in some young people to come behind us and help transition some of the more senior people in our business to make sure their clients are taken from, it's all a whole. It's all in vain. It's not good. But Mark and I have put everything we have into this to make sure that there is a second generation. There's someone taking care of other people's clients as they retire, and build that on and have a repeating cycle that's client focused, and we've done that.
Wow, that's you just took me by surprise that you brought that up, and it's true. This industry is not reseeding for the future, and with the mentality, maybe more importantly, reseeding with that mentality of being a personal investment advisor, not a retail product salesman. Folks, make sure that you go to NabellWinslow.com. Mark Nabell, Scott Winslow. And we thank you, by the way, for all the support you give us here. And it's good talking with you. We'll have you back in the next month or so.
Thank you, Chris.
And we'll keep up to date. Folks, if you're concerned, it's so important right now. I'm just going on here a little bit. But if you're concerned about where you are with your investments, your investment plan, hey, a second opinion never hurts. It never hurts. NabellWinslow.com. Give him a call. Stop by and see him. I'm Curtis Wright. We'll be right back here on The Beat.